My name is Amol Nirkudkar. I'm the CEO of Patient Prism, and delighted to welcome Brian Colao from Dykema here. We're having a great discussion on the hot topic of DSOs, and really in this segment we want to talk about trends that we're seeing in dentistry, because there's a lot of excitement. We go to shows, and we went to your amazing conference just last month, and the amount of excitement was just electric. Right? Everybody's excited about what's happening in dentistry, what's going to happen in the next decade. There seems to be, at least in the DSO world, there seems to be tremendous excitement. I'm not sure what's happening on the other side in the individual practice world, but I think there is. I think dentistry itself is going through an evolution and at a pretty fast pace. So what do you think, what do you see the market to be now, and what do you see as trends that are big trends that are changing the industry for the better or worse? Well, we don't know what it would be.
It's changing the industry, you know. There are many that would insist that it's for the better, but
Sure.
What I try to do in my position is just call it like I see it. The change is going on, you know. It's not my place to say good, bad, or other. It's happening. You see great evolution and great consolidation. You see the evolution of dentistry from single, solo dentist-owned locations or dentist-owned group practices to DSOs.
Sure.
And you also see consolidation, that private equity groups, large DSOs, intermediate DSOs are buying up and acquiring offices. So you see a great evolution and a great consolidation of the industry. But as we sit here today, the industry is still dominated by small single dental practices, thousands of them. I think in the next 10 years, you're going to see this white-hot M&A climate that we're in intensify,
Sure.
and you're going to gradually see all of those offices, you know, become affiliated, acquired and affiliated into DSOs or private equity groups. And if we go 10 to 15 years from now, there's not going to be too many solo practitioners left.
And why is this happening, though? Why is the consolidation happening, in your opinion?
Well, it's happening because dentistry has proven to be virtually recession-proof. When we had our Great Depression of a few years ago, dentistry continued to thrive and excel. The demand for dental services is exceeding the supply of practitioners and dentists out there. And because of this, it's an extremely attractive segment of the economy for investors. So you've seen billions of dollars pumped into this space in the last few years, and it's like there's a party going on in dentistry and everybody wants to come to the party. And you've not just seen, if we went back 10 years, Amal, you would see very large private equity firms that wanted to buy the very large DSOs. But now, you know, you're seeing hundreds of private equity groups, family funds, other investors that are willing to come down and make grassroots or ground floor investments. You know, 10 years ago, if you didn't have 30 or 40 offices, nobody was going to buy you. Now they'll go down and they'll buy 3 offices. They'll buy 2 offices and say, we have a great operator. We are going to invest in this operator. He or she may only have 2 or 3 offices now, but we're going to grow it to 15 or 20, and then we're going to roll it up and sell it. So you're seeing hundreds of players. It's increasing the demand. And you have just an explosive, the most explosive M&A environment I've ever seen going on right now.
And dentistry is right in the midst of it today. I mean, it'll continue to expand over the next few years.
I mean, they say, you know, the U.S. population growth from 2013 to 2033. This is from the CDC, and you know, also the Medicaid authorities publish these statistics. The population's expected to outpace dental practitioner growth by 13% from 2013 to 2033. A very significant statistic, because unless you soften the requirements for foreign dentists to come to the United States, you're going to have an acute shortage of dentists. The demand is going to outstrip the supply, and you're going to be able to charge more. It's really attractive environment for investors.
So there's also, while we're talking about that outpacing of demand, the dental therapist movement is also coming afoot. That we may not have
very controversial.
Very controversial.
You know, Minnesota has adopted some laws to allow dental therapists, and I've been to a couple conferences where I've had the pleasure of interviewing and speaking with some dental therapists, and they're making a good living and they like it. There are a lot of dentists that are very resistant to it, and they are lobbying the legislature, they are filing lawsuits, they are doing things to prevent the ability of freestanding dental therapists from opening up offices. Minnesota has gone on and done that, but it's very controversial, and it'll be interesting to see how it plays out. I think in rural areas and places where you're simply not going to be able to get enough dentists, I think there's going to be a place for that, but I think it's going to be slow to catch on in the big metropolitan areas. Like down here, we're in Florida, I don't think you're going to see them in Miami anytime soon.
Right. So what do you think, what do the DSOs account for in terms of like the market share today?
Well, the top 20 DSOs accounted a couple years ago when they published the statistic, accounted for about 4% of the market. I think everybody agrees where we are right now, we're in August 2018, we're about 11 to 13% market saturation now. So there's a lot of runway to go.
There's a lot of runway
to go.
And you said the explosive environment where we're seeing the talk about. I mean, the first time in my career I've seen more clinical practitioners talk about an accounting term that I am familiar with, which is called EBITDA, right? Earnings before income taxes, depreciation, amortization, right? And that number is like, oh, what's your EBITDA?
It's hilarious,
multiple?
right? You go to a dental conference and you see a bunch of dentists talking about EBITDA. Imagine
EBITDA,
that.
right? I mean, I am like, oh wow, I think I'm in an accounting conference, right? So there's this EBITDA accretion. I guess there's the. Just can you tell us about this EBITDA multiples and what's
EBITDA,
happening?
as you know, because you're a CPA, Amal, EBITDA is the gold standard for valuing, segments across an organization. An organization might have different, this is before dentistry, it might have different divisions, and to value the organization, EBITDA would be the gold standard. Well, think about the practice of dentistry. You may have 10 or 15 offices, so EBITDA is the gold standard to value your organization across many different, platforms or many different offices, and that is what the investment world, at least in the DSO space, the private equity groups, the DSOs, they have chosen, I think wisely so, EBITDA as their metric for which to value an organization. So, the example I use all the time when I'm just speaking to dentists that don't have a CPA is I'd say, you can have a $1 million practice, and this is a simplification, of course. And let's try it this way. You can have a $2 million practice, and it costs $1.8 million to operate that. What is your EBITDA? $200,000. You could have a $1 million practice, and it costs $600,000 to run that organization. What is your EBITDA? $400,000. So what have we learned? The $1 million practice is more profitable than the $2 million practice. So that is why we need EBITDA, and that's why it's utilized. So sometimes you'll have folks throw around numbers like, I've got a 2 million, I have a 3 million, I have a 1 million. The way you figure out really how valuable it is you have to calculate the EBITDA of the organization.
And the trend now that we see in the M&A space, and you see this a lot because you do most of the deals in this industry now, is the valuation multiples are rising,
right?
As you get bigger. And talk to us about what multiples are you seeing and what factors are going into those multiples. We see anywhere between 10 and I don't know what the top end that you've seen is.
Well, very good question, by the way, and it's something that's on the minds of when I go and I speak at these conferences. Everybody wants to hear about how much money can I get, what multiple, and what affects it. So the way I answer it is it depends what you're trying to do. There's two types. I mean, there might be 2.5, but there's two principal types of transactions that are in the marketplace right now. The first one is you're going to affiliate with a DSO. A big DSO that has hundreds and hundreds of offices is going to affiliate your practice, basically acquire your practice. You're going to see a 5 to 7 multiple for that, and it will depend. I'll talk about what's a 5 and what's a 7 in a little bit. The second type of transaction you see is a private equity group coming in and investing in a platform. And that multiple can be anywhere from, I've seen it 6 or 5 or 6 on the low end, all the way to, I think the industry record is 18.2. I mean, we saw that in the Dallas-Fort Worth area a couple years ago for a wonderful platform that I know very well. So what affects the multiple? Well, a couple things. The first thing is payer mix. The more Medicaid you take, the lower the multiple you're going to get because of the regulatory risks and the lower reimbursement. The second thing is, are you integrated? Same thing as if you're buying a house. When I'm speaking to folks at these conferences, and the best analogy I can think of that everybody understands is, if you're in a house shopping for a market, in the marketplace shopping for a house, and you've got a fixer-upper, you know, you're going to buy it, but because you're going to have to invest money, put a new floor, paint it, you know, do some other things to it, you're going to pay less. But if the house is move-in ready and ready to go, you're going to pay a premium for that. Sure. Same thing with the dental offices. If you have an integrated technology platform, and you know this very well, and you've got centralized billing, centralized collecting, a call center, centralized marketing, and you've got all of these things, people are going to pay a premium for that. If you don't, they will still buy you in this marketplace. This is an explosive market, but you're a fixer-upper. They're going to have to invest money post-closing, so they're going to pay a lower multiple. The last thing that really can can impact the multiple is, do you have a cohesive plan for growth? In other words, if you're trying to do a private equity deal. If you're trying to affiliate with a DSO, and the DSO has 400 offices and they're going to buy you and you're 401, sure, you don't need a plan. They're just buying your office and they're going to assimilate your EBITDA. But if you've got 15 offices and you want to sell to a private equity group, or you've got 8 offices, a private equity group's not interested in just assimilating your EBITDA. They're saying, if you've got 8 now, how can you get to 20 so we can roll it up and sell it a second time? And you've got to demonstrate, 1, that you're a competent operator, and 2, that you have a cohesive plan for growth that you can replicate and grow from 8 to 15 or 20, and they can roll it up and sell it.
And the reason we're talking about this in trends, because this is what's happening now.
That's what's happening now.
This is what private equity is actually talking to the groups about, is that what is driving these multiples. And it's important to understand that not all, and I think we should have a segment on multiples later on, but not all multiples are created equal. You have to go deeper and understand what constitutes this, and kind of get your organization ready from all sorts of infrastructure, legal, operations, handling of, centralized handling of things.
The more integrated, the higher the multiple. But the takeaway right now in the marketplace is everything is selling. I mean, we have a market for distressed, damaged assets. We have a market for average, for above average, and elite performing. So, anybody that listens to this, if you're turning a profit or even struggling, you can most likely sell. I mean, almost everything is selling in this marketplace, but depending on how you're positioned through all the things we're talking about, payer mix, integration, a cohesive plan, you can dramatically impact the multiple that you get in this marketplace.
That's great. Great segment to end on, because I think a lot of our listeners are going to want to know this information. So thank you. Great discussion on trends in dentistry. We'll continue this.
Thank you very much.
Thank you.